Assalamualaikum warahmatullahi wabarakatuh. Good morning everyone. The Honorable Dr. Wahdi Yudi as the lecturer of the Portfolio of Islamic Investment and also my beloved friends. We are from Group 14. We will discuss some topics that already presented, but we will focus in the Islamic side of Sharia. Before we start our presentation, let me introduce the member of the group. My name is Dedi Trihermawan, and my friends Sinintia Nurfilaili, and the last is Iman Agung Muhammad. So let's start our group presentation. I'm going to talk about risk management. We'll have 5 important points, that is introduction, conventional perspective, Maqasid al-Sharia, perspective, in Al-Quran, and the last is type of risk. Let's jump to the first. Introduction. On the other side, Muslim jurists use the word khatar and mukhatara for business risk. Mukhatara is defined as a possibility of unexpected outcomes. Khatar and mukhatara are interchangeably used with horror. According to Al-Mawsu'ah al-Fiqhiyah al-Qadiyah, mukhatara is the doubtful status of a business transaction in which gain and loss are unknown. By analyzing various definitions of khatar and mukhatara from juristic perspective, Muhammad concludes that the concept of risk, according to Muslim jurists, is almost similar to what is defined by conventional economists. By analyzing various definitions of khatar and mukhatara from juristic perspective, we can conclude that the concept of the according to Muslim jurists is almost similar to what is defined by conventional economists. So, the risk management is the key responsibility of the management and should be part of the overall corporate governance structure. An effective risk management system comprises of identifying, measuring, monitoring, and limiting risks. This process in turn depends on appropriate control and auditing procedures. And the next is conventional perspective. From a risk management perspective, risk faced by financial institutions or fees can be classified into 3 types, namely the risk, which can be eliminated, the risk transferable to others, and the risk manageable by the institution themselves. Fees as financial intermediaries tend to avoid particular risks taken by simple business parties. Moreover, fees will not undertake activities imposing risks upon them. The practice of fees is to undertake activities in which the risk can be either efficiently managed or transferred to others. So there are mainly 4 types of risk faced by fees. The first one is credit risk. It is the risk or failure of a company or individual to pay the contractual interest or principal on its debt obligation. This type of risk creates panic for investors who hold bonds and sukuk in their investment portfolio. The second is liquidity risk. It's a risk when a business entity is not able to meet short-term financial demands. This happens when a security or hard asset is unable to convert into cash without a loss of capital. The third is market risk. The possibility for a company or bank to experience loss arising from movements in market prices. It is also called as systematic risk. This type of risk cannot be eliminated through diversification. The last is operational risk. The risk of loss resulting from inadequate or failed internal process, people and systems, or from external events. So the next is Maqasid al-Sharia perspective. The broad perspective on risk and its management are embodied in the objective of Sharia, which is to protect the well-being of mankind. Al-Ghazali defined Maqasid al-Sharia as promotion of the well-being of the people, which lies in safeguarding their faith or deen, their self or nas, their intellect akal, their lineage nasal, and their wealth mal. Islam provides detailed instruction to manage various types of risk in a broader sense. Among others are criminal assault risk, illness risk, investment risk, business risk, and etc. Interestingly, Islam also commends to manage spiritual types of risk such as to avoid fraud, fornication, idolatry, apostasy, and the other types of sin. And the next is in Al-Quran. There are many Quranic verses that quiet mankind to have risk management in wealth and financial affairs. Those verses precisely show the significance of strategic planning to control and mitigate anticipate risk. The absence of efficient risk management will harm curtains purchase to the extent that the risk most likely endangers one's life. The first verses is in Surah Al-Baqarah, verses 282. O you who have believed, when you contract a debt for a specified term, write it down and let a scribe write it between you in justice. Let no scribe refuse to write as Allah has taught him. So let him write, and let the one who has the obligation dictate. And let he fear Allah, his Lord, and not leave anything out of it. And attestation is a basic requirement in Islamic commercial law, whether it is an ordinary documentation at an individual level or an official documentation at an entity level. The core objective of attestation is to mitigate the risk of any party denying what was agreed upon, which may lead to a loss of capital. In case the financial transaction that involves debt is performed during a journey, Quran allows the creditor to receive collateral as the debt security. This is an example of risk management, mitigating credit risk due to the failure of the debtor in fulfilling his financial obligation. The aforementioned verse clearly gives an indication that if the trust of the counterparty is not sufficient and effective, steps must be taken to avoid fraudulence and unreasonable loss. The second verse is in Al-Tirmidhi. O the Messenger of Allah, should I leave my camel untied and trust in Allah, or should I tie it? The Holy Prophet replied, tie your camel and then trust in Allah. The hadith does not only illustrate how a Muslim should deal with his faith, but it also instructs to manage the risk of calamities and losses. It is worth mentioning that risk management is not against the concept of tawakkul or trust in Allah. Tawakkul is to choose appropriate means toward achieving the goal first, then entrusting Allah for the better result. And the third is in Surah Al-Daraqutni. Whenever Abbas ibn Abdul Muttalib, may Allah be pleased with him, handed over his assets or camel for mudarabah to his partner, he stipulated that he should not take the asset across the sea, nor take them down to the bottom or dry river bed, nor trade them for live animals. If he were to do any of this, he would have to bear the compensation. Word of Abbas' stipulation reached Rasulullah, and he allowed it. This hadith permits stipulating conditions in mudarabah business in order to prevent exposure to undue risk. Apart from that, this hadith also became a foundation for the ruling of restricted mudarabah, where capital provider can put forward some restriction of management where to invest the fund. The last is the type of the risk. The first is forbidden risk, the prohibited risk in the form of excessive horror. Horror is usually translated as uncertainty, risk or hazard, but it also implies ignorance, gambling, cheating, and fraud. Generally, horror relates to the ambiguity and/or ignorance of either in the terms of the contract or in the object of the contract. Thus, a sale can be void due to horror, due to risk of existence and taking possession of the object of sale on one hand, and uncertainty of the quantity, quality, price, and time of payment on the other. There are five of risk or uncertainty. The first one is risk or uncertainty associated with time of payment. For instance, unconfirmed date of payment in the case of a deferred sale. The second is risk or uncertainty associated with existence of commodity. That is a trading of an item that does not exist. The third one is risk or uncertainty associated with a quality of commodity. That's the meaning is ambiguity happens in the specification and the features of the goods. Number 4 is risk or uncertainty associated with quantity of commodity. For instance, selling something without specifying the price or quantity of the goods. And the last is uncertainty associated with the possession of commodity. For instance, trading of birds in the sky or fish in the sea. And the next is tolerable risk to be avoided. The final types of risk identified by Hassan is the permissible risk that does not fall in the above. It includes the types of risks that are inevitable, insignificant, and unintentional. The example of the risk can be operational risk, liquidity risk, and credit risk. Based on the above discussion, it is permissible from Sharia perspective to minimize tolerable risk through a hedging strategy. According to Hassan, an Islamic hedging approach toward risk management must fulfill the following conditions. The first is the strategy adopted to manage tolerable risk must not contravene with Sharia principle of al-ghun bi al-ghurm. The second is the approach must be free from the elements of excessive gharar. The third is the underlying contract must be based on Sharia principle. In other words, it is not allowed from Sharia perspective to use hedging tools in a financial transaction when gain of one party is equivalent to other loss, because it leads to eating of wealth without any justification. And this some reference, and the next presentation will be delivered by Sinintia Nurfilali.
Assalamualaikum warahmatullahi wabarakatuh. On today's presentation, I'm going to explain about the alternative investment portfolio management on the Islamic views. And these are the outline for our presentation today. The first, we are going to talk about the real estate. The second is hedge funds, and the third is commodity funds. But before we get into our first topic, which is real estate, I'm going to explain about the definition of alternative investment and alternative Sharia investment. What is alternative investment? Alternative investment comprise groups of investment with risk and return characteristics that differ markedly from those of traditional stock and bond investment. While in Sharia investment, the investment funds governed by the requirements of Sharia law and the principles of the Muslim religion. Now the first topic, real estate. What is real estate? Real estate is the land or structures attached to land owned by those who put their interest on it. In the Islamic finance world, real estate has always been, save for a few exceptions, a perfect asset class. And why is that? It happens because when you have a property that is occupied by a tenant, The tenant pays rent in exchange for the right to use and occupy that property. Once that rent is paid to the landlord uses the rent to pay off various landlord expenses, including financing costs, and any balance goes into the landlord's pocket as profit. This transaction is equitable, tangible, and certain. There is no meaning that there is no speculation, uncertainty, or unjust gains, because the tenants know exactly what they are getting for their money, what is owed as rent, and when, and the same applies to the landlord. And what makes it different with the regular one? I mean, with the conventional one. Well, the type and use of the property in occupation must be relevant with the core and morality of Islamic finance. That is why a building that contains a casino, a bar, a bank, and insurance company in occupation are not appropriate for Islamic finance, because its underlying operation, gambling, alcohol, payment of interest, speculation, are at odds with the core and morality of Islamic finance itself. And how Islamic finance used to finance the real estate? Well, there are two ways for the Islamic finance to finance the real estate. The first, with the murabahah structure, which typically used to finance the commercial property, and the ijara lease structure, used commonly to finance residential properties. The second is hedge funds. Hedge funds privately manage funds collected from various customers, usually from the usually it comes from the upper layer. The funds are managed by the fund manager. And meanwhile, in Islamic investment funds, a joint pool wherein the investor contribute their surplus money for the purpose of its investment to earn permitted profits in strict conformity with the precepts of Islamic Sharia. And in the Islamic investment funds, there are two main entities, which are the first funds manager and the second is investor. And these are the structures of Islamic investment funds. The first is structure of company. In structures of company, the investor considered as stakeholders, while the fund manager considered as the board of directors. The second, trust, which very common in European world, and the investor appointed fund manager as a trustee to manage their funds. And the third is partnerships. In these partnership structures, the fund manager plays the role as the general partner, while the investors are appointed as the ordinary partner. The third is commodity funds. In conventional market, many types of funds are available that allow investors to invest in any possible things. For example, oil, wheat, pork bellies, orange juice, and so on. Conventional investors who don't necessarily want to see and touch the commodities in question look to fund management companies to make comprehensive trades for gaining the profits from the commodities price changes. While Islamic commodity funds also invest in physical commodities, but we must avoid the short selling as well as investment products of a speculative nature, such as commodity futures. And these are the conditions for the Islamic um, Islamic commodities funds. The first is the commodity must be owned by the seller at the time of sale. The second, for what sales are not allowed. The third, the commodities must be halal. The fourth, the seller must have physical or constructive possession over the commodity he wants to sell. The fifth, the price of commodity must be fixed and known to the parties. Why the why the commodity must be owned by the seller at the time of sale? Because the short sale in which a person sells a commodity before he owns it are not allowed in Sharia. And about the why the commodities must be halal, it is of course because it's not allowed to deal in wines, pork, or other prohibited materials. And then the seller must have physical or constructive possession over the commodity he wants to sell, because constructive possession includes any act by which the risk of commodity is placed on the purchaser. And for the price of commodity must be fixed and known to the parties, it is obvious because any price which is uncertain or is tied up with an uncertain event renders the sales are invalid in Islamic finance. And these are the two examples of existing Islamic commodity funds. The first is Al-Rajhi Capitals located in Saudi Arabia. They oversee commodity funds product, which the first, a US dollar commodity fund, the second, a Saudi Real commodity funds, and a Euro commodity fund. And the second example is from the Riyadh Capital Bank, which also located in Saudi Arabia. Um, they has two commodity trading funds available to the investor. One fund deals in US dollars and the other deals in Saudi riyals. Both of them are Sharia compliant. And in conclusion, all kind of transaction happens in the alternative investment portfolio must be under the rule of Sharia law, which shouldn't contain anything haram.
So now I want to tell you about the managing institution investor portfolios and Islamic view. Okay, the outlines. This is that I want to tell you. The first one in insurance on Islamic view. The second is pension fund on Islamic view. And the third one is bank on Islamic view. Okay, we're going to the next the next topic is insurance on Islamic view. This is that discussion that I want to tell you about the insurance on Islamic view. The first one is how insurance works. The second is anything wrong with insurance on Islamic perspective. And the third one is solution. Okay, we're going to the how insurance works. This is the graph that can imagine how insurance works. The first is client or the customer will be signed with the insurance agency that in this contract how much the customer must pay per month or per year to the agency, and then the agency will invest their money for the make a profit. After they have a profit, the money will be back again to the insurance agency. And if the customer get accident, the agency will be covered. So when the customer didn't get accident, they get nothing. This is the big line that how insurance work. If I speak too fast or unclear, you can read this one. Okay. Anything wrong about insurance on Islamic perspective? Yes, there's a big three problem that insurance has. The first one is Maisir, the second one Gharar, and the third one Riba. I want to tell you why insurance is Maisir. Okay, Maisir is gambling. What does customer buy on insurance policy and has of the number of funds? He doesn't know the position of the profit or loss. If he is profitable, he can liquid claim, then the insurance company loss. If he is losing position or never claims, then the insurance company is like a bias. There's several surah that tell about the gambling. The first is surat Al-Maidah ayat 90. Hai orang-orang beriman, sesungguhnya meminum kamar, berjudi, berhala, Mengundi nasib dengan panah adalah termasuk perbuatan syaitan. Maka jauhilah perbuatan-perbuatan itu agar kamu mendapat keberuntungan. And then I want to tell you why insurance is gharar. Obscurity in insurance product offered, there, whether they are death benefit or health benefit or cat accident, there is uncertainty about when the customer will experience disaster. If you die, it will happen. But if you get sick or accident, it's necessary. Even though the modern research say before death, most people will fall ill first, but they cannot be answered that people must fall ill before they die. So to then a claim occurs, where did the big money come from? Do insurance company and other players win the lotteries or gambling and use the money to pay claims? Or does the insurance company out back off to the bank? Or the claim fund come from bank interest or other business and other obscurity? There are some dalil that from HR Muslim that diwariskan oleh Abu Hurairah bahwa Nabi melarang jual beli gharar. And then the last I want to tell you why the insurance is riba. Okay, additionally, there is a process of exchanging money. Generally, small money are exchanged to big money by not cash. All activity of buying, selling that bring additional excessive benefit are called usury. Money is one of the items punished are the religious minimum of exchange. Proposes versus exchange of ribawi goods. There are several dalil from higher Muslim that emas ditukar dengan emas, perak ditukar dengan perak, gandum ditukar dengan gandum, kurma ditukar dengan kurma, garam ditukar dengan garam, haruslah sama ukurannya dan takarannya serta tunai. Apabila jenisnya berbeda, ukuran juga boleh berbeda dengan syarat tunai. Okay, if the insurance is haram, there are any solution? Yes. In this world, there has a insurance sharia that based on Islamic view. This is the how insurance sharia work. Okay, the customer will be signed with the insurance agency to pay the contribution or ujrah to the agency and at the tabaru. And from the tabaru who's come from the customer will be invest and make a profit. But after he makes profit, the profit will come again to the insurance, the agency of insurance, and then the tabaru will be like how to say it, how to minus with administration, and then we'll back again to insurance agency, and then we'll back again to the customer with the profit sharing. Okay, it's gonna be a little bit unclear, but I will tell you why insurance area is free of riba, gharar, and maisir. Okay, gharar. No, in the Sharia insurance, contract is not sale and purchasing, but the agreement is grant, and the premium is given its nature to the donation that have been granted, and the sincerity about the element of the gharar. The second sir, the truth in Sharia insurance is maisir. So the Sharia insurance based on tabaru or donation. Both those who help and those who are helped together benefit. Both those who contribute and those who are donated were also equals. If a fellow participant is affected by illness or death, the money used to participant money the same as the mosque is free. There is a donation box. If the box is collected a number of funds and the environment around the mosque is a dead or mosque, usually donate a donation box affect the people to Shariaism about the element of maisir. And then that is in Sharia insurance is riba. In Sharia life insurance guarantee free of riba because they invest. Because the supervised by IDX or Indonesian Stock Exchange and OJK, Financial Service Authority. There are approximately 1,000 issued and the 1,000 list companies. There is one of ISSI. There's Indonesian Area Stock Index. More or less in this there has 3,000 issues beside the ESS supervised by IDX and the OJK is supervised by MUI or Indonesia Islamic Council. And then I want to let's go to the next topic, that pension fund and Islamic view. Okay, the first things that the outline is the first pension fund based on the defined benefit plans. The second is pension fund based on the defined contribution plans, and the second is the Fatwa MOE who's tell about a pension fund. Okay, uh, from the group three that we know that pension fund based on the defined benefit plans. Here's some few data about pension fund based on defined benefit. On Islamic view, there's nothing wrong but pension fund based on defined benefit plans because the fund was some appreciate from the company to employ because he has been contribution to the company during his life. And the second one is pension fund based on defined contribution plans. In case same like an insurance, the employee will pay the premium corresponding the contract, and when he was pensioned, he will get the fund corresponding the contract. The problem is how insurance manage for invest the money. If they invest a company under UASS in Exam Sharia Indonesia, so the fund will be halal. But if the insurance agency invest their money to the something haram like share stock from the company who's produce alcohol, it's gonna be absolutely haram. Okay, here's the because that the government or MUE make some statement about the pension fund is halal. In Fatwa Dewan Syariah Nasional number HCN garis miring DSN strip MUI garis miring X1 garis miring 2013 tentang pedoman umum penyelenggaraan program pensiun berdasarkan prinsip syariah. Okay, we are going to the next topic about bank. The first one I want to tell you about what is bank, and the second one I want to talk of the bank, and number third is why conventional banking is haram, and the last one is I want to tell you about the Sharia bank. Okay, based on the group 3 tell about the bank. The banks are financial intermediaries involved in taking deposits and lending money. Important difference and regulation constraints on business structure persist among the bank internationally. So that's the meaning of the bank from the group 3. And then I want to tell you about the kind of bank in Indonesia. The first is bank conventional and the second one is bank Sharia. The bank conventional is managed and fund can be done on various business lines that are considered safe and profitable. So far, there's no rules and laws that apply. The bank has the freedom to run managing this fund the first line to calculate the maximum profit. We can underline in here is maximum benefit. The bank conventional that's no matter what the business is gonna invest to some things has a big profit. And the second one is bank Sharia. Customer fund receive and the form of deposits or investment cannot be managed. All listeners careless. Managing an investment by Islamic base must be based on Islamic law. There's a business line choose from the one of meets the rules of Islamic laws. Okay, I think that's all from pick about. Thank you.